welcome to this panel. I am incredibly excited to be involved with it. Incredibly excited for a couple of reasons. The one is that financial inclusion normally ends up as a conversation that kind of says, there are 2 billion people out there who have miserable lives because they can't get banking services, and gee, that's a shame. Someone else is going to worry about it. Some do-gooders are going to go and deal with it. It doesn't often take place in a kind of context where it really brings together these worlds of financial inclusion and tech and innovation. So I'm really pleased to be doing that. I'm going to give you, and I'm not going to talk for too long because these are really the experts in this, but just a brief little anecdote of kind of how important this is. I was in Kigali recently and I met some guys who are doing a kind of Uber for motorcycle taxis. You get on the back of a motorcycle taxi. They're incredibly dangerous. These guys have come up with a little app on a smartphone. You can hail a driver and the driver is kind of scored for safety. I said, that sounds, kind of great, amazing. How do you take payments? And they said, we take payments through Stripe. I thought that's amazing. Kind of technology developed by two, Irish brothers, has found its way into Kigali. And I said, and how do you pay the drivers? And they said, well, every Friday these motorcycle drivers come and queue up outside our office and we hand over the cash. And that's just a kind of very concrete example of how innovation is trying to take off and just can't. I'm going to introduce my panel. We've got, and you've got their bios, so I'm not going to take too long. We've got Kosta from the Gates Foundation, background with Swift, so he kind of knows the nuts and bolts of banking. We've got Bob, who's kind of spent years doing banking with Citi across the world. We've got Francesca, who has come from banking and is now working with the British government and DFID, trying to make all of this work. So I'm going to start with you, Kosta, which is just kind of what is this opportunity if one thinks about it not as a social problem but also a business opportunity? Let's scale it.
So there are 2 billion people unbanked on the planet dealing with cash, but it doesn't mean that these people don't actually transact. In fact, they tend to live pretty complex financial lives, and their day is done of many small payment transactions. It wouldn't be, like as I lived in Africa, you don't buy cigarette by the pack, but by the piece, but many times in a day. So a lot of small transactions. And so the huge volume of this is absolutely mind-staggering, and it is out there a business opportunity. Just a few numbers. December 2015, all the mobile money systems combined were worth about $1 billion US. In the 2 major mobile money systems, M-Pesa in Kenya, bKash in Bangladesh, they have connected 10 million users in the first 3 years of their operation. In Uganda, there is more people with mobile wallets than there are with bank accounts. So just to give you these few numbers, that there is actually a new opportunity to serve the poor people while actually making profit.
Yeah. I'm going to, Bob, let's just bring you in here, because at least in the rich world, kind of transactions are something that banks, at least to the consumer, seems to be something that the bank is giving away for free in order to get a whole lot of other stuff. Kosta's kind of saying this is the great business opportunity. Is he right? And if so, how are banks doing to capitalize on it?
Yeah, I think he is right. And I think different banks will capitalize or add value to it at different layers of the value chains that exist around. We were talking about payments for just a moment ago primarily, but there'll be those institutions. We've seen banks just like Equity Bank in Kenya, which grew from a very small, actually a defunct credit union to what is now probably the largest bank in the country in terms of number of accounts of individuals. So there'll be different business models that have come out that have become possible because of the scale of what I think the new technology provides with. And I go back to, remember in America for a long time or here, banking was not done for individuals by the high street bank, the Chase Manhattan Bank, the First National Bank, Citibank. They were done by community and other banks until technology made that possible. And when we first introduced the ATM, it's an example, right? There was until Citi introduced the first ATMs, we all went to bank branches and you stood in line and you brought cash in and out. Suddenly you were that inflection of being 24 hours, 7 days a week, you could access money. And I think banks are going to play that role, but different banks will play different roles in this transformation.
Francesca, I'm going to come back to you in a second, but Kosta, are we at an inflection point? Is there a kind of tipping point that says, stuff that couldn't have happened 5 years ago is happening now?
Yeah, there is. Obviously, technology, and here we are in a FinTech conference, so I'm preaching to the converted, of course, but technology, digital, makes possible huge scale, provision of huge scale of financial services at very little cost. To Bob's point, also capturing what I call the digital slipstream of transactions to open it up for innovations in terms of microcredits is a huge opportunity as well. So I think we are seeing the emergence of simple, frictionless, super scalable and secure financial services that will open this, that will tip this iceberg over. And the simplest is, I can send you money the same way I send you a text message.
Yeah.
Try that here.
And Francesca, you've kind of approached this from the other end of the use case, which is, kind of people have needs. How do we serve them? What's your view on both the barriers that are out there and also whether kind of you agree with this view that we're at a tipping point, that there is more interest from the private sector in coming in?
I think there is, and I think I agree with what's been said before. And DFID has been putting a lot of effort into mobile money offering, working with the private sector through institutions such as the IFC, with some of the companies you've already mentioned, like Equity Bank, Bcash, etc., to advance mobile money offering to the poorest, and trying to persuade private sector businesses that might not want to go into those areas if they didn't see it as profitable. But if you do some risk sharing with someone like DFID or the World Bank, you might be able to persuade those services to be expanded. But what also concerns me at the same time, FinTech is offering an awful lot of opportunities. It makes a massive change to a business model of what you can roll out to the poorest people. But there do seem to be barriers such as access for women. There is a lot of focus at DFID on women and girls, also on fragile states. So how are these models applicable in a country that is very unstable politically or economically, or both probably? And also, how do you reach the most rural people who could end up, ironically, being left further behind because technology has taken the rest of the population, taken them with them, and they've been left further behind.
Yeah. Let's just come back to you for a second there, because could you just give us an example of some of the kind of mechanisms of risk sharing that are going to take government money and allow private sector involvement?
There's a number of examples, but we have a very big program which is focused on technology and mobile money. So as I mentioned, we have an arrangement with the IFC where they will put in 50%. They will encourage a private sector partner has to put in 50% of the money, at least, and then the IFC will put in the other 50%, which effectively comes from us. And that we've been doing that in Nigeria, in Bangladesh, in Pakistan, in lots of different countries, to encourage, in Kenya, to encourage private banks, the private sector, to invest.
Bob, you got some thoughts there?
Yeah, one of the thoughts is, many of the platforms that are being built need volume as well. And that doesn't often start with only the rural or the poorest, nor does one product necessarily only need to be identified for that. In Kenya, many people use M-Pesa, right? They make it to pay, you can pay school fees with it, or your driver, or you can send it to a rural, extended family in rural Kenya. But what you have is important. The Better Than Cash Alliance, for example, is a movement too, through the UN, and many of us are members of that, which is really about getting governments to put their payments and their transactions on mobile or digital platforms, because then you bring huge volume. And people like ourselves are users of the technology many of you have. We mentioned M-Pesa in Kenya. We use it, for example, with one organization, One Acre Fund, a nonprofit, works with small farmers in rural areas. Citi, with one office in Nairobi, did about 660,000 transactions in a month to farmers in rural areas of $5 transaction sizes on average. We can do that now without ever having an office outside Nairobi because of the interoperability. And I think, and same in Mexico, we are now opening up 3.5 million accounts where you can open your account through the mobile, which is a unique way. Mexico is very progressive about having a KYC, or that's just usually a barrier for banks, that you could use on a limited way for opening a savings account or transaction account if you have already cleared for the mobile. And so we have about 3.5 million people banking who never went into a bank to start. They began because they had a mobile rather than a bank account. They weren't looking for a bank account necessarily. They were looking for a solution, a payments, a place to save money. They had their needs, and that was addressing them.
Yeah. And Kosta, interoperability has been a big issue for you.
Bob has used the word platform, and that's really, I think, a key building block is this digital highway that is interoperable between providers, so that if you are on one provider and I'm on another, we still can do this transaction in a frictionless way. So that's I think, the key point. The second point, I really emphasize it, what you said, Bob, is governments are one of the key, as an institutional payer, they are a huge user of these platforms, so that to distribute pensions, salaries, but also social welfare distribution schemes and so on. Finally, I want to mention another segment which is quite important, which are merchants. If you inject money, if you digitize money, it's very important that people be able to use it to transact every day. So equipping merchants is going to be key, and that's another huge opportunity out there, actually, if you think about it. So,
it's a focus we have, and it's so interesting working with the largest corporate clients we have at Citi, the largest brand name consumer multinationals in a number of countries, and we're particularly piloting Latin America now. With the smallest shopkeeper bodega, they're still delivering goods and collecting cash in trucks. And the ability to construct not only a platform and some of the tech we're piloting came out of FinTech. We had these Citi Mobile Challenges in Bogota, Buenos Aires, Jerusalem. We had it down in Nairobi, Bangalore. Some of the technology came from providers there that we're adapting and applying. And in applying into that, a banking provider like a microfinance institution, you can create a value chain of financial transactions that is a consortium of deliverers, a couple of us, that brings a solution to some of the largest companies in a country or government and the smallest businesses. And that's very powerful.
Yeah. I'd love to see if there are any questions, comments, interactions from the floor. So if there are any hands, do you want to wave them vigorously? I'm staring into the light here, so and I'm a bit short-sighted. We've got a question over here. I'm going to take a couple of questions, give them back to the panel. So there was a hand. Do we have any roving mics here?
There was.
Could we? Okay, so we've got a hand over there. If we've got a mic. And another one over there.
We don't have any mics.
No mics.
Go ahead and shout.
Do you want to stand up and...
So, aren't you giving the telcos too much power by moving the KYC into the telcos' arms?
Okay, so I'm going to repeat that for those who couldn't hear you. Aren't you giving the telcos too much power by moving KYC into their arms? I saw another hand. Who's got a over there, please, and stand up and shout. Okay, and to repeat that, which of the DFIs are the most advanced? And if there is a third hand, I'll take that right now, and if not, there we go, and on that side over there, please, thank you.
So what are the implications of blockchain for the unbanked?
Great question. What are the implications of blockchain for the unbanked? I'm going to throw this to you guys. Who wants to volunteer on, should we take them in order on the first one?
I think the first one, what was the first one again?
What was the
The
first one?
KYC.
I can do KYC only because we use it. But look, it's not the banks that gave the mobile operator the KYC, it's the regulators. It's the Mexican regulators, which have a very sensible view of materiality. There are different thresholds of KYC depending on how high balances will be in an account. And they have a very thorough, for other reasons in Mexico and other countries, a thorough KYC. It really removes a barrier. The cost of converting someone from a mobile payment platform to a bank account, a fully deposit insured bank account of some kind, is usually very expensive. It means coming into a bank, seeing a bank, somebody seeing your ID. If we can abbreviate that transaction, we were able to bring 3.5 million people. And we don't really see it as competitive. It's really collaborative. The partnership on that is the mobile provider. We're not a mobile provider and they're not a bank. But together you can do something very creative with good technology.
And Bob, I'm just going to challenge you briefly on that. What do regulators say, and not just national regulators, and I'm going to throw out some, FATF, FSB, all of these kind of super regulators or clubs of regulators. Are they happy with you saying, hey, we got this guy, we've got his phone number,
No, I mean, I think they set these rules together with an enormous amounts of dialogue. There's a group called AFI of regulators meeting each other, which have to set for the security reasons, for money laundering reasons, for whatever status they have. So it's not given away by any means, and few governments do it well, but it also means you have good national identification in a country. Mexico does. Other countries like India introduced it with biometrics. 800 million people now, biometric ID or so in India. So they're well thought out, but there are some governments that know. Mexico is an OECD middle-income country where 2/3 or more of the country was unbanked. Yeah. So you really do need to accelerate this creatively.
Francesca.
Just to support what Bob just said, on the KYC side, it's one of the massive barriers in terms of expanding financial inclusion. So we do, and a lot of other people do, a lot of work with governments and with the FSB or the FATF, etc., those bodies to try and say what's the balance between managing AML risk, CFT risk, and allowing financial inclusion. So there is a very fine balance, but that's what you need to work through with those global regulators to get the balance right.
Yeah. Kosta, I'm going to bring you back to a bit unfair to ask Francesca about whether she thinks DFID is doing the best job. So who's leading in this field?
So you mean in terms of donors?
In terms of government?
Well, I certainly think DFID is, I mean, we work together with DFID in many countries, Nigeria, Pakistan, more generally Africa. But I mean, all the countries in Europe, Germany has a very intense program. I mean, there is a lot of emphasis. I think as well organizations like AFI that you mentioned that actually pull together regulators is an important one. So which one is the most impactful? I mean, you know, my motto is all hands on deck. We need everyone's contribution. There is no better or worse.
Francesca, I'm going to come back to you on this one, though, which is not to sing your own horn or trumpet your own horn, but what of the other government funding agencies do you really admire? What are their programs that if you look across them and say, if there are any?
Yeah, no, of course there are. I think it's quite interesting to see who's got strengths and got better capability, staff or whatever, in different areas. So, for example, USAID have quite a strong digital team, and I refer to them quite a lot for their expertise because they've got more people and more expertise in that specific area. Or say the Swedish agency they're looking at micro insurance and trying to develop their offering there, or KfW and the Germans in terms of working with the private sector. So I think there's different capability in different governments, and you need to just get to know who's strong at which area.
Great.
I would just say it's ultimately the national regulators that are the most important, and they can be informed through support. But we think of progressive regulators in places like the Philippines, Pakistan, Kenya, Indonesia, Mexico. These are governments that have put out circulars and guidance around issues that we don't have in the UK or the US yet. And they have taken what you're calling the sandbox this morning here, or safe harbors. They've gone and taken the risk of saying, how do we take new models that can accelerate inclusion? Because it's so immediate to their needs. So I think the best organizations are those that help them to share their own experiences.
Because blockchain, very quick for you. I know you had some thoughts.
Very quickly, and first of all, let me just be precise in terminology. I think distributed ledgers as a technology is quite contributive in my mind to financial inclusion, simply because as others that reduce costs and remove friction are essentially very powerful for digital financial inclusion. There are numerous experiments around this, and many of these we are starting to get the results of. So I personally believe that distributed ledgers as a way to implement safe distributed systems without friction are quite powerful.
Yeah. Any other thoughts from Francesca?
I think I was mentioning to you behind stage about research that we're looking into for alternative payment systems, and it might be that blockchain technology could offer us something there. Yeah. We're open to the idea. There's obviously lots of issues to itself, regulatory type issues with blockchain, but it's such an amazing technology that there must be something in there that we can use.
Yeah. I mean, I wish we could carry on with this all day. I'm going to give you 10 seconds each, just for like, if you had one investable idea, if I gave you $10 million right now to say, one investable idea in financial services, what's your 10-second elevator pitch?
Yeah, I won't follow you there, but let me say something different. I think that an economy that includes everyone benefits everyone. Just keep that in mind, because that is clearly what digital financial inclusion is all about. And I'll tell you privately.
I think we've covered, I'm afraid we're out of time. We've covered a lot of ground here. We've gone from kind of regulatory stuff to the blockchain. If you would please join me in the traditional round of thanks for an excellent panel.